All right, everyone, welcome back for another technical analysis video. It is October 12th, 2020. Markets are closed. We're looking here at the SPY, which was up about 5.5 points today, 1.6% overall. And I want to direct your attention to the volume here. Very, very interesting. All day we had very, very light volume, all up in pretty much all the way to the last 10 minutes. We were on pace to do about 65 million, which is just under average. And really this whole move up here, with the exception of the big Trump dump day last week, has been on very light volume, which leaves me still skeptical of the sustainability of this rally. However, price action must be respected. The market looks like it wants to go up here and test this double top. It's kind of like we're kind of climbing the wall of worry. The market's focused on stimulus right now. Could we get a sell to news move? Yeah, we could. But right now it looks technically like the market is kind of over this whole thing. However, there are a few reasons why I'm still skeptical and why we could potentially see a reversal. One of those is that it is OPEX week. So that's always going to throw a wrench in the market. A lot of the times in options expiration, you will see the market ride up into options X the first couple of days and then reverse on Wednesday and close lower, or vice versa. Or sometimes you'll just see it chop sideways. I believe this week right here, this week here was an OPEX, and we had kind of this sideways action here all week to burn out those premiums. But if you look here at the intraday chart here, the SPY, you see this big candle here at the end. Now it looks like buy volume, but actually if you zoom in a little bit, you can see that there's a lot of sell volume there in the last couple of minutes. Huge uptick right here, as well as the last 2 minutes here. This is the 1 minute chart, so we're looking at the very end of the day. And the reason for that is because there was, let's see, 11,000 calls expiring at 3:53, 14,000 at 3:52, and another 11,000 at 3:51. So this was clearly just a push down to avoid paying out those premiums on the Monday OPEX last minute. Just that little last premium burn they're trying to take away from the retail investor. And you see this stuff, it's typical of OPEX week, but it's also a Monday, so we have the OPEX every Monday. But now, as far as how that relates to the end of the week, there's over 100,000 calls at 350, and another 27,000, 28,000 at 355. On the put side, there's nothing really that high. You have a slight straddle at 350 on the put side with 64K. So it looks to me like 350 is kind of the magic number this week. Yes, we did rally up. Yes, this market is in a really strong technical position right now. However, that doesn't mean that can't change. We left a really large gap on the daily. So yeah, here's the weekly chart. A really large gap on the weekly as well. Gap up in here, which I'm about to show you right now. You see the top side trend line, the megaphone. Everybody knows about that. It does look like it wants to go test double top, but this could change. I mean, it could come back in, fill the gap, and we could finish lower for OPEX week. One thing that I have been paying attention to very much so this year, and it's been very reliable, is the election year seasonality trends. The blue line right here represents an election year on average over the last 59 years, and the pink line represents an average year. So now if you look at the S&P, it's been very similar this year. As we switch over to the daily, look, you had the kind of the neutral to upside move through January, February, the big drop in March, and then up, little choppy, failed head and shoulders, up into June, down, back up July, August, September, down in September, and then October, and now I'll move up in October. And if you look here, pretty much the same thing, neutral to upside, down in March, up, failed head and shoulders, ripping up through June, little dip in July, up back to August, September, and then a drop into October. Now maybe we're right here, maybe we're right here, and maybe we could dump out towards the end of the month. That's kind of what this has been telling me, although price action is saying it wants to go back up to the the all-time highs. Where do we go? I'm not sure. Who really knows? But I'm still holding my DXD. I'm still holding SDS. I did add to QQQ today, and or excuse me, I did add to QID, which is short to QQQ 2X. And you know, if we get up to all-time highs and we confirm above that, then I'll stop out. And you know, it's not a big deal because my position sizes aren't that big, and you know, I've managed to trade all right. But look in here, the reason why I added to QQQ is you see this big trend line here going all the way back to March, April. You know, having a gap up into that level, that's huge resistance. That's huge resistance. I can't stress that enough. And we left a big gap here on the daily and the weekly, and it is OPEX week. It just feels like it's almost kind of too perfect of a setup here to not be a bit of a bull trap, at least in the short term. So that's something to keep an eye on. Another reason why I'm not super bullish on this rally here, you look at the GLD. What's the GLD doing? I mean, if the market is up on hopes of stimulus, then why isn't gold rallying? I mean, why isn't silver rallying? You know, these are things that are kind of like sending out red flags. We look over the IWM. IWM was up decently today, not nearly as much, although it has had a nice rip over the last 2 weeks. I'll give it that. Now this level here, 167, I've been watching this for about 2 months now. Like, this is an area that I want to pick as a short. Like, really, I really like this level. Why? Huge gap fill, and look at this trend line here. You get those to coincide. I've been waiting for a long time for these two lines to coincide, and it looks like we're going to trade right up into that. I will absolutely pull the trigger on this to the short side for a swing trade. Absolutely. So that's something to look for as well. And that's regardless of, we could make all-time, I could stop out of DXD, I could stop out of whatever. This regardless, I will take this as a short. Absolutely. So assuming we trade up, you know, assuming we continue this uptrend like straight up. Now if we go up and we start chopping sideways and we consolidate underneath it, then I don't like it anymore. But if we continue trading up like parabolic like this, oh, I love it. Absolutely love it. So with that said, yes, I will monitor the short positions. If I have to stop out, I have to stop out. But in the meantime, if we are you know, in full bull mode, what I am going to do is look for some longs. So this morning I posted a few charts on Twitter, and one of them right here is Uber. I really love this pattern. You got the breakout above this pivot here, and then the breakout, retested this pivot here. Now you're back above, and you know, I almost pulled the trigger on a buy today, but I want to get closer to 36. But I really like this chart here. Nice cup and handle pattern. Here's your thrust. Whoops. Yeah, here's your thrust, here's your cup, and then here's your little handle. Same thing. Another one I really like is Snapchat. Check this out. Big thrust, big cup, and now you're consolidating above the previous resistance. If this can come trade into the 20 moving average and just chop sideways for a few days, I really like this to the long side as well. Another area I like is the airliners, but specifically really just Southwest and Delta. Again, another big cup, rounded bottom, and another handle coming up here. Southwest and Delta both have much better balance sheets than some of the other airliners, way less debt on them. And it reflects in the chart patterns. I mean, the big cup and handle here, you see the same thing on Delta as opposed to, you know, say a Boeing. I mean, look at how much, you know, you see this, there is a similar pattern here, but look at how much weaker it is. It's barely off the lows, and you can see the sector as a whole really, as we look at the Jets ETF. It's a decent chart, but I feel much better with Southwest or a company like Delta, for instance. So moving on here, I'm sure everybody wants to hear about pot stocks. So we'll look at MJ. Everyone knows I'm long. Yeah, nice day for MJ. Up nicely, and it's, you know, kind of just moving sideways here, but it finished near the highs. CGC had a nice day. Tilray was up, I think, 5.5%. Aurora, again, kind of lagging. Again, this thing has just been beat up by the algos ever since that earnings report. But still, held up nicely. If it can just trade sideways, eventually, if this sector starts to run, it doesn't matter. Aurora will run with it. Again, this might even just be OPEX related. I mean, $5 is a really round number, and we know the market loves round numbers, especially for options expiration. So, and there's a lot of shorts in this, so they could be trying to suppress it until after OPEX. So that might be a thing too. But ultimately, if the sector really runs, if MJ and Tilray and CGC and Afria and Cron start taking out the highs from last week, eventually Aurora is just going to run, and the shorts will have to cover. You can even see Aurora, actually, it's MJ there, but you can see it even try to curl up just a little bit towards the end of the day. So, I mean, catching a little bit of bid. It's not in terrible position, honestly. But yeah, we just got to be patient with these like we've been. This should be a $6, $7 stock within the next couple of weeks. So, again, just being patient with that. Yeah, and last thing, just want to quickly cover oil. I'm still short via puts for January, the USO. Nice little move down in oil today. Again, it's just kind of chopping in here and consolidating. Oil's eventually going to go lower. Inventory data is terrible. Seasonalities, suggests that, I mean, oil always dips down into the fall and in the winter. And, if you have things like COVID spikes and, Cuomo or, other governors talking about rolling back reopenings and all that sort of stuff, it's not going to be good for oil. Ultimately just being patient with this chart, and it'll pay us out eventually. So not too worried about it. All right, guys, that's all I got for today. You guys take care and have a great rest of your week trading. Thanks.